What's up, trader? Welcome to Adekunle Feed. On this video, I'll be discussing how I view the market. So let's go. Before I proceed with the real charts, I would like to do some mapping so we can actually get the concept. So first and foremost, there is what I call strong high and strong low. So when I'm talking about strong high, what does this mean? You see this pattern? This pattern That's what I call strong high. So what is my strong low? I believe you can see that. So let me mark this with this so that I can understand what I actually mean. So what does this strong low signify and what does this strong high also signify in my approach? You see, you can let me choose this strong high as an example. For instance, you have been in a situation whereby the market is buying. Let's take a look. You can see market respect the previous low, it does not break it. Market is buying. Market is buying. So suddenly you see that market disrespect this low that has been respected earlier. So you should know that here we have strong high. So that's why I mark out this area earlier. So the same thing applicable to strong low. The same thing applicable to strong low. You have been on a sell before. Take a look of this example. Market is selling and respecting the previous high. Market is selling and is respect. You see these two high that is respected. It has never been disrespected for once. So as this momentum keep going, suddenly you see that the market just break the high. You understand? That means that's a strong low. You understand? You see, market break structure as it used to be, and then suddenly it disrespect the previous high that is being respected earlier. You understand? Look at this area here. You see that it's respected. So here, that's what we call strong high and strong low. So in a nutshell, if I want to draw my strong high and strong low, this is how I draw them. And this is my strong low. Market break structure and disrespect the previous high or previous low that have been formed, which is being respected before now. So that is strong high and strong low. So now, after you've understand what strong high, strong low is all about, so and I have two approach, I can call it model. How do they form? You see, this market is just about pattern recognition and you creating story behind it. It is the story, I mean the logic, the science that you created behind this that make it more interesting. Many people identify these patterns, but because there is no story behind what they do, so they tend to fail, and the patience that require for them to excel in this market won't be there because it's actually logic that you can use to understand, like to navigate this market. It is all about story that you give that makes the market to have meaning. So now I'll just show you these two pattern, the two approach. Whenever you see strong eye, you know, the break of structure, and then market disrespect the low. That's our strong eye. Then market now move up again and break another low. You understand? After market break another low, what will you be expecting? You'll be expecting market to go higher again. This previous high, this recent high, many people will be looking at it for them to short again. But market is very manipulative. This is our liquidity point. And when I reach a stage whereby discussing liquidity, you are going to understand different kind and different way the market liquidates. So that's one thing on its own. So markets will come here. Many people here is a kind of investment that is, it can be called it can be called a trap. But if you understand how the market works, you know that it's not a trap, it's just a necessity. You as an investor, you also do that. So what do? We wait for this high to be broken and then you sell. So this is how it goes. You have your liquidity here, and your target will be this low here. So our our entry will be around this place. There will be a kind of POI here, but let's just assume that somewhere around here, based on assumption, because we do not have original framework that we are working for now. So you just put your entry here, target this low. Although we are going to be trading in ranges, you understand, but for this video, let's just assume. So this is the first model of how I see the market. And if you understand this model, believe me, you have the patience naturally on how the market goes. So that's the first model. The second model is this pattern again. The market breaks structure to the upside and then disrespect the low. You understand? It disrespect the low. So when it disrespect the low, instead of the market to come up and create another high like this, which it has does now. So it now move down for it to go and to break another low, you understand, but it won't break another low. Before it reaches this low, the market will stop and then move higher again. You understand? Then go down this time around. What do you notice? Market also do what here? It it take out liquidity here. There is liquidity here to be taken. But after that, you should understand that here the market does not break this low before it reverse. You should understand that this is two different markets entirely. So how do we go about it? I'm going to be explaining it in all my video that I'll be doing because it's very logical. It is the story that we create here that make it to make sense. You don't just take trade based on pattern, and our target will be here. You understand? Our target will be here as well. So this is the two ways on or two model how I see the market. This is strong eye. Now we are in strong eye, for sell. Let me use this um inverse scale. Let's say this is our strong low here. You see, market break structure and then disrespect this high. It break this high, so it creates another low and then break it. So now market will come here to break this and use it as liquidity point, and then you look for entry at the POI here. But there's another ways with whereabouts we choose our POI. So I'm going to discuss that as well. And same thing applicable here. You see, break of structure, and then disrespect this eye, create another eye. it should break the eye. It disrespect that. It does not break the eye. You understand? It respect it, you know, and still break this eye, you know. So that's how to look at the market. So let me show you some example. No, I shouldn't cut this. I shouldn't take this out for now. So let me reverse this. So first and foremost, the first example is, look at this place. This market did what here? It breaks structure to the upside and then disrespect this low. You know, there is a low here that is being respected earlier, you know. It goes up like this. Yes, and so this low has been disrespected here. Do you see? And what happened again? After that low has been broken, what does the market does? It moves up again and then creates another low. So here is going to be our liquidity point. But based on the advanced level on how I see the market, I'm going to choose this place as the liquidity point. But for the physical and easier way for you to understand, based on what I've discussed, let me choose this place. So let me choose this area. So because it's look alike, this is just the textbook version of what I explained. So what do we do? Our target will be here. I mean this place, this low. This is going to be our target. My entry point will be here based on, you see, then you enter the market here, you put your stop loss above this place, and then you target this low. Can you see it? Look at this first setup. It look alike. This first drawing. If you look at it very well and look at this one, they look alike. Do you see it? So that is the way I feel the market. My first approach. Now look at this one again, the second drawing here. So let me show you how it look like in the market. You see, for example, the market break structure here. That's our what? Our strong low, and break it to the upside again. Can you see that? So after that, we expect the market to be going, because this is just an advanced something, but just for you to get the context. So here, the market comes here, you know, it comes down. So it should break this eye here. Let me mark it out. This eye supposed to be broken, but what happened? Market does not break that eye. You see, it does not break that eye. You see, what does it do here? It creates, you know, it reverse. As it reverse, so it comes to this zone again. It's going to do what? From my previous explanation, it's going to break this eye like that. So I will look for entry here because I don't have much time. I have to be somewhere now. So it should be here. And after that, you look for entry here. And our target will be there. You see? Look at it with this second one. It look alike. But I think I will stop here and come for better explanation. I will try to show you how I look at the market and you see how the market actually goes. This is a very simple approach to how you see the market. It's your boy Adekunle Fit. Please try and subscribe to this channel because I'll be giving you different content about how to fuel the market and different forex talk, trading stuff that's going to help you out about your journey. Please kindly follow my and subscribe to my channel. Thank you very much.